Good afternoon, everyone, and thank you for joining us. My name is Michael Houghton. I'm the chair of the Lucerne Alternative Investments Fund and also a member of the investment committee. Joining us today are managers that we invest in via LAIF, and I'm pleased to introduce to you Michael Henshaw, who's the portfolio manager for Pure Asset Management, Henrik Anderson, Chief Investment Officer for Apollo Capital, and David McNamee, portfolio manager for Altor Funds Management. First of all, Mike, welcome. And I'd just like to kick off by asking you a couple of questions. And the first one is, can you give me a 1-minute elevator pitch of what you are and what Pure do?
Yeah, sure. Thank you, Michael. And thanks for having us on this video. Look, our fund was set up 3 years ago. We're running 140 million. We target a 15% return to investors, about half of which is capital growth and half of which should be derived from income, which we pay out quarterly. And really what we're trying to do is solve a problem in equity markets. And that really is the idea that a lot of smaller companies, which is our target area, they struggle to get access to bank debt. And so when they're listed, they're very much beholden to their equity price. And as we all know, the equity price and the operational performance can become detached, such that the company is starting to deliver good results or has been delivering good results, but it's not yet reflected in the share price. If that coincides with a period when the company needs capital, it's very much hamstrung in that capital can be very dilutive. And so we've come up with a concept of providing convertible loan notes that are an alternative to an equity raise. And the attraction for the companies is that they can raise capital effectively at a premium to their share price. So we charge an interest rate, and we have a conversion term that is a significant premium, typically 70+% above the prevailing share price.
Thank you. And from what you've described there, you wouldn't be calling yourself a long-only equities fund. So how would you see your asset class fitting in an investor's portfolio?
Look, we're absolutely focused on hybrid investments, but we think of ourselves as an absolute return fund, in that we only have at most 20% of our assets in equity or equity-like instruments, and 80% in credit or cash. So that's delivering us that resilience to the market. But we have potential to receive equity-like returns from that portfolio of equity instruments that we derive from playing the space of our hybrid debt.
And what would you say one thing that investors need to know about your asset class?
As an industry, the convertible loan note industry has had a poor track record in Australia, but in fact they're extremely useful in providing that stopgap between what is debt and what is equity, and allow people to take a much lower risk, but still give themselves access to the upside that small caps can deliver, which is, an area of the market that is particularly exciting in my view.
So would you say that you're well positioned in the way that you've structured your investments in those companies to better manage downside risk or volatility in your underlying investments?
Obviously, with 80% of the portfolio in either cash or fixed interest, there's an inbuilt resilience to falling equity markets. And 3 years in, we've never had a credit loss. We do have the volatility of the equity component of the portfolio, or through the convertible note exposure to equity, but that tends to be quite short term. When the market sold off in February, March last year, the market was down 30% and we were down just a little over 5%. And thereafter, once you've taken that initial hit, the portfolio tends to stabilize quite quickly.
Sure. Okay. Well, thank you. I'm going to move on to Henrik now from Apollo Capital. And Henrik, similar set of questions for you. And maybe we could begin with the 1-minute elevator pitch on your asset class.
Yeah, absolutely. So at Apollo Capital Management, we run two strategies. So we are a focused crypto asset manager, the leading crypto asset manager in the country, we believe. And our first strategy is a long crypto strategy. We launched that strategy 3.5, 4 years ago. It's since then up around 5 times. That strategy has a strong focus on something called decentralized finance, or DeFi. That's a new financial infrastructure that is being built using blockchain technology. We also run a second strategy, which is very different in its risk return profile. It's a market neutral strategy. We use something called stablecoins in that strategy to generate returns. Our target return for that fund is between 20 and 40% net returns per annum.
Okay, and obviously this is a question that I think is going to be really interesting to hear how you would answer it, because it was something that we like to try and explain to our investors when we make investments. Where do you see your asset class sitting in an investment portfolio?
Yeah, so for me, crypto asset is an emergent asset class. Is sitting in perhaps in some portfolios in that alternative investment portion. We see investors allocating somewhere between 1 and up to 5% of their allocation to something like crypto asset that is highly volatile, but also has a potential very big upside.
So what's one thing you'd like investors to know about your asset class?
Well, crypto asset is the best performing asset class the last 3 years, the last 5 years, and the last 10 years. And we see an increased adoption again in Bitcoin as a digital gold, in DeFi, and in the NFT market. And we also see an increased acceleration, I would say, from kind of the interest from institutional investors trying to get exposure to this new emerging asset class.
Now, obviously, it gets reported often when volatility does strike, particularly for Bitcoin, because that is how people see the crypto asset market. So how do you manage that downside risk or that volatility in your funds?
Yeah, that's right. The asset class has a very high volatility. I think for the upside, you have to accept some of that volatility. From the investor standpoint, I think the key is to allocate a smaller portion of your investable assets to something that is as volatile as crypto, and that's how you manage the risk best from an investor standpoint.
Okay, interesting. Thank you, Henry. Now move across to you, David, and thank you for joining us. Similar set of questions, and the first one is, what's the 1 minute elevator pitch for Altor Alpha?
Yeah, thanks for having me on, Michael. So the ASX is quite a unique market globally. We're focused in it on the small sector of the Australian stock market. And when you put it in a broad global context, Australia hasn't really had the depth that the venture capital market, as say Europe or the US. A lot of emerging companies look to list on the stock market. And, if you look at the ASX, there's roughly about 2,400 listed companies, and about half of those are trading sub 200 mil market cap. So it's quite a large investment universe. It's an investment universe where you find some dislocation in terms of asset prices, and there are inefficiencies that exist, we believe, in that market. And we're looking basically to do the work, really deeply understand what the catalysts are in the businesses, what it fundamentally means, what's the realistic upside to those investments. And the catalysts really drive the share price sort of moving forward. And as we get close to those catalysts coming through, we look to exit our position. Okay, so given what you've described there, where would you just see your asset class, your fund sitting in an investor's portfolio? Yeah, look, it's a very unique. I mean, the fund's only very small, so we sort of soft closed the fund end of last year. The liquidity constraints are real in the market segment that we're operating in. And just with the very nature of dealing in small equities, it is a high risk proposition, but we still are focused on building out, really deeply understanding what the risk reward is for each of the investments, and they need to stack up. We're really looking for asymmetric risk return profiles. And if you fill a portfolio full of those, then, you'll have a really good expected return on the total portfolio.
So from what you've been describing, it sounds like you would have some challenges around managing downside risk and volatility, given the size of the companies you're dealing with, and of course, seeking the catalyst to generate that price growth.
Yeah, look, it actually, surprisingly, like you can find things, and we do find things that, you can buy companies on negative enterprise values or close to cash, and not pricing in much of the upside. So that's really our sweet spot. We try and find as many of those as we can. We try not to price in too much blue sky or execution risk from management teams. We try and back, big thematics or large tailwinds that are going to drive different sectors. One that sort of comes to mind, just because it's very recent. We invested in a resource company called Sunstone Metals. Malcolm Norris, the CEO, I followed him for a long time. He's found some of the world's largest copper porphyry deposits. We were actually buying Sunstone from 0.9 cents, which was actually trading below cash or cash equivalent backing. Malcolm subsequently found a large porphyry deposit in Ecuador just recently, and the share price is sort of trading above 6 cents today. So, we've, in terms of that particular investment, even if he didn't hit on the whole, we thought that our downside was extremely well protected. With the company wasn't burning a lot of capital, had flexibility around what it wanted to do with its balance sheet strength. It had a really strong management team. Malcolm had a strong track record, and he ultimately delivered on finding another copper porphyry deposit, and the stock went up 6 times.
So what's one thing that you would like investors to know about your fund or your asset class?
Just that, we're seeing some incredible technologies coming through. We're seeing some incredible founders coming through. There's so many exciting things happening, whether that's in the hydrogen sector, the renewable sector, the mining sector, the technology sector.
Okay, good, great. Thank you very much. I'm now going to ask each of the managers that are with us today just to spend a little bit of time on their fund with a couple of questions that's unique to what they do. I'm going to go back to you, Mike, and about Pure. And probably the most interesting question for me would be, how do you source your opportunities?
Well, Michael, I wish I had a better answer for you than the one I'm about to give, to be honest. It's quite an organic process. We started off very much outbound, looking for companies that we thought looked undervalued, needed capital, and our solution would work for them. But we negotiate every transaction that we get involved in, and it's not an ideal starting point for a negotiation, sort of offering someone capital. So we've really worked on the deal flow that we can generate, and that is really going out to a number of the different brokers out there, the IR companies, corporate advisors, and building up a network of people in those industries, a lot of whom we know from earlier in our careers, to try and explain to them how, for certain companies, our solution is a better outcome for their client than an equity capital raise, which is, the default position of a lot of small caps. And what we're trying to offer is a sort of productized alternative.
Yeah. So on the back of that, is it possible for you to give us an example of a recent opportunity that you participated in, why you liked it, why you went ahead with it?
If I had to pick one, I think we've got a lot of exciting companies in the portfolio, but if I had to pick one that's really a standout right now, it would be a company called XREF, which is a HR software company. So XREF has been on the market for some time. It's reasonably well known, small cap. It provides automated reference checking for employees, servicing corporates, SMEs, government departments. So if you think about these companies, they're typically hiring tens or hundreds of people a year, and the HR department is going out and making a lot of calls to referees. And what XREF is saying is really our solution can streamline a lot of that work. Not everyone can be or have an automated reference check, but certainly for a proportion of the market, it's a very time-saving solution. The overall industry that it operates in is 400 million per annum globally, but it's growing at 20+%. And XREF is a dominant provider in the Australian market and one of the larger providers in the US. It's obviously a highly fragmented market at the moment, and it's got a foothold in Europe.
Okay, sounds really interesting. Thank you, Mike. Henrik, I'll just go to you now with a couple of questions. Obviously, I think the one that I have to lead with is the one that's probably got a lot of investors curious is China's activity in the space regarding Bitcoin over the last 6 weeks, and in particular their push to ban Bitcoin altogether. So I'm just curious about your thoughts on that, what you're seeing just generally in the Bitcoin market, and of course, you know, the impact that other countries are starting to have with discussions around either issuing their own version of a cryptocurrency or regulation.
Yeah, absolutely. So China has been sort of banning some parts of the crypto markets all the way back to 2013, 8 years ago. Now in May, as you say, in May, April this year, they put a ban on Bitcoin mining. So Bitcoin mining was fairly big in China. It was estimated that around 50% of all Bitcoin mining was taking place in China. Bitcoin mining is how the Bitcoin blockchain is secured. And actually, when we talk to investors in the past few years, one of the biggest concerns they've had is that Bitcoin mining has been concentrated in China. And now what happened was when China banned Bitcoin mining was that obviously the miners shut down in China, and the hash rate, which measures sort of the mining power on the Bitcoin network, fell quite dramatically. Bitcoin price also took a hit at a time. It declined heavily in May. In fact, May was the second worst month for Bitcoin ever. But since then, the Bitcoin hash rate has recovered, and now it's back to the level where it was before the Bitcoin mining ban in China. So that just, I think, shows everyone how resilient the Bitcoin network is. And now we're seeing Bitcoin mining being moved to Northern Europe, to North America, to US and Canada. And long term, that's fantastic for the Bitcoin network because it's becoming more decentralized. It's not reliant so much on China anymore. In fact, it's not reliant on China at all anymore. So that's really good long term for the decentralization of the Bitcoin network.
The other question, you've used the term a couple of times earlier, is in relation to decentralized finance, or DeFi. It's another sector within the blockchain or crypto asset class that is emerging. Maybe if you could give us the one minute elevator pitch on what DeFi actually is and who the main players are.
Yeah, absolutely. So we identified DeFi quite early on as sort of the main use case for smart contracts. Those are new financial primitives that are sort of disintermediating legacy financial institutions. They're more efficient, they're transparent, and they're fair, these networks. And it's basically software kind of replacing a lot what financial institutions have been doing for a long time. And you can uniquely do that with blockchain technology. So this has been a market that has been growing very, very quickly during the last 2 years. There is something called total value locked, which is basically how much money is in these different DeFi protocols. That metric has gone from below 1 billion in the beginning of 2020 to over 200 billion today. So you can say that market has increased by 200x in a year and a half. So it's growing very quickly, we have seen a few different verticals within DeFi taken off during this time. So one is the lending markets, where you can sort of permissionless use software to borrow and lend money and crypto assets. Major players there are called Aave and Compound. We've been an investor in Aave for a long time, as an example. A second vertical within DeFi that has really gained a lot of momentum is something called decentralized exchanges. We've been an investor in this market for a long time as well. Major players are Uniswap, Curve. Those are crypto assets that we hold in our portfolio. We believe the next big wave when it comes to DeFi will be something we call on-chain derivatives. So in traditional markets, the derivatives markets are much larger than the spot markets. We think the same will play out in the DeFi markets. So we've been investing heavily in that space the last year or so. We have investments in this space. One is called Synthetics, one is called DYDX, and the third one is called Perpetual Protocol. There are also some examples of investments we have in that area as well.
Thank you, Henrik. I think we could probably spend another 35 minutes on just DeFi alone. It's fascinating how it's playing out. So thank you.
Thank you.
I'll actually cross to you now, David. And I think the key question, because you are in a unique space in the marketplace, as you described earlier, is just how you actually identify those micro cap winners. But equally important is, when do you identify the time to exit?
Yeah, good question, Michael. It's sort of the entry and the exit's always pretty difficult. But so I guess there's a number of different sort of facets to it. In terms of the investment process side of it, we're looking for things that show a really a large upside, that have a strong thematic behind it. So, really diving deeply into understanding what are the key things in the company's pipeline, or what are the key things, what are the key catalysts and diving in and understanding what that actually means from a valuation perspective. So, as these things play out, as these events play out, we have a really good understanding as to what the true valuation is. And exiting for us is, when that upside isn't as large, and there's no sort of catalyst, even if the catalyst is coming through, if it's not a 3, 5, 6 times your money scenario, then that's at the point where we're looking to exit. Because at that point, people are starting to price in a lot of blue sky, a lot of execution from management teams. We don't really want to hang around for that. And what you often find from a share price perspective is things kind of bubble along within a range or come back down to earth, which is what's happened with quite a number of investments that we've exited out of. They've sort of either stagnated or come back down. So
I suppose from that, the next question might be, those special investment opportunities that you talk about. Can you give an example of one that you do have in your portfolio?
Yeah, I mean, it dovetails really well into that. So, for example, we got involved with a local company here called Red Earth Energy. They basically produce virtual power plants for batteries within the home. They're also doing some interesting things in the crypto mining space as well, Henrik. But it basically they build a really smart system that allows the consumers to choose what they want to do with their green energy that they're collecting off the roofs of their home. So they can trade energy back into the grid. They can use it to power different energy, other systems they might want to run. They can charge their electric vehicles. So it's really putting the power of collecting that green energy back into the power of consumers' hands.
Thank you. And that brings us to the end of the discussion. So I'd just like to thank Mike, Henrik and David for your participation today. I think everything you've spoken about has been incredibly interesting. It also is pleasing for us to have been invested with each of your funds from early days and to have participated in the performance that you've all contributed to what our fund has done. And for those of you that are watching that wonder how you can get access to each of these funds, if you're unable to invest directly, in the case of Altor being soft closed or minimums required or wholesale status, you can always invest through the Lucerne Alternative Investments Fund, which does give you that access as well. So from me, that's it. And again, thank you everybody for your participation and goodbye.